I am AI Avatar of CA Ratan Mundra. India and South Korea are entering a critical phase in their economic relationship by renegotiating the Comprehensive Economic Partnership Agreement or CEPA. Originally signed in 2009 and implemented in 2010, this agreement has guided bilateral trade for over 16 years. However, global trade realities have changed significantly since then. Today, both countries are looking beyond traditional tariff reductions. The focus is now on building a modern, strategic, and future ready partnership. This renegotiation is not just an update. It represents a potential transformation of how India and Korea trade, invest, and collaborate across industries. The renewed negotiations are driven by strong political commitment from both countries. Leaders have agreed to accelerate discussions and aim to significantly expand bilateral trade, targeting around $50 billion by 2030. This push reflects recognition that the existing CEPA framework no longer aligns with current economic priorities. The world has moved toward digital economies, resilient supply chains, and strategic industrial partnerships. Without updating the agreement, both countries risk missing out on these opportunities. The renegotiation is therefore not optional. It is necessary for maintaining relevance in today's global trade ecosystem. India's primary concern with the current CEPA is the widening trade deficit. Recent figures show that imports from South Korea significantly exceed India's exports, leading to a substantial imbalance. From India's perspective, this raises questions about whether the agreement is delivering equitable benefits. While CEPA was designed to promote mutual growth, the outcomes suggest asymmetry. This is why India is now pushing for a recalibrated framework, one that ensures not just increased trade, but balanced and sustainable trade outcomes. The original CEPA was a comprehensive agreement for its time. It included provisions for reducing tariffs on goods, opening up services sectors, and encouraging bilateral investment. It also established rules of origin, which determined eligibility for tariff benefits and included mechanisms for cooperation across industries. However, while the structure was broad, it was built for the economic realities of the late 2000s. Many of today's key sectors, such as digital trade and advanced manufacturing, were not central to the agreement at that time. The renegotiated CEPA is expected to go far beyond tariff reductions. The new direction focuses on creating balance in trade, reducing non-tariff barriers, and improving the overall ease of doing business. Non-tariff barriers, such as complex regulations, certification issues, and customs procedures, often create more friction than tariffs themselves. Addressing these challenges could significantly improve real trade outcomes. The emphasis is shifting from theoretical market access to practical usability, ensuring businesses can actually benefit from the agreement. One of the most important changes in the new CEPA direction is the inclusion of future-oriented sectors. These include digital trade, artificial intelligence, green technologies, semiconductors, and advanced manufacturing. These sectors represent the backbone of modern economies. By integrating them into the agreement, India and Korea are positioning themselves for long-term collaboration. This shift transforms CEPA from a traditional trade agreement into a platform for technological and industrial cooperation. Global supply chains have become a major strategic concern, especially after recent disruptions. The upgraded CEP aims to strengthen supply chain resilience between India and Korea. This includes cooperation in critical minerals, manufacturing inputs, and industrial production networks. By aligning supply chains, both countries can reduce dependency on uncertain global sources. This strategic approach adds a geopolitical dimension to the agreement, making it more than just a trade pact. Another major development is the focus on investment ecosystems. Discussions include the possibility of setting up dedicated Korean industrial zones in India. These zones could offer ready infrastructure, streamlined approvals, and integrated facilities for businesses. This would make it easier for Korean companies to establish and expand operations in India. Such initiatives move the agreement toward a trade plus investment model, where real economic activity is driven by on-ground industrial development. Despite the strong intent, several uncertainties remain. There is currently no finalized revised agreement text available publicly. Negotiations at the product and sector level are often complex and time-consuming. Issues like tariff schedules, rules of origin, and regulatory standards require detailed discussions. Even after agreement, the real challenge lies in implementation. Without effective execution, even well-designed trade agreements can fail to deliver expected results. The renegotiation of the India-Korea CEPA represents a significant shift in approach. It is no longer just about reducing tariffs. It is about creating a balanced, strategic, and future-ready partnership. If successful, the new CEPA could improve trade balance, enhance investment flows, and strengthen industrial cooperation. However, Its success will ultimately depend on the details of the final agreement and how effectively it is implemented. For businesses, investors, and policymakers, this is a development worth watching closely, as it could reshape economic ties between India and South Korea for years to come. Moonses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within Gift City and India, delivering end-to-end IFSC setup. Operational support and handling complaints, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BAT, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.